properties in pensions and the new rules relating to inheritance tax on pensions. In this video, I want to recap on why people have properties in their pensions and how they get properties into their pensions, structures that they need, and then just think about how the new rules on inheritance tax actually make things very difficult as we get older. And with an eye to inheritance tax, maybe we need to reflect that on whether we want to hold properties in the very long term in our pensions. I do regular updates on tax and accounting issues, and in particular I'm looking at and reflecting on the budget that we recently had. So please subscribe and you'll be kept up to date on that. And if you press the like button, it just helps me and it helps the channel, so if you could do that. Pensions and properties in pensions. So why do people have properties in pensions? Well, first of all, they can only have commercial properties in their pension scheme. You can't put like normal buy-to-let properties in a pension scheme. They're just debarred, so you just simply can't do that. But people, particularly self-employed people, tend to like to have property in their pensions. They don't want to be 100% reliant on financial assets. So they want some property as well, because we can touch it and feel it. And very often that property is the premises from which they operate. Now there's two structures really that you can have your property in. You can have a SIP, which is self-administered personal pension, which is actually probably one of the most common sorts of pensions, so everybody's heard of it, and a SAS, which fewer people have heard about, which is a small self-administered scheme. So in the personal scheme, that's personal to you. A SIP is personal to you, so you have your assets in your SIP, and then if your SIP provider allows it, you can buy property. With a SAS, normally it's a pool of people, so it's a pool of people and it tends to be family members, so maybe the business owners, husband and wife, or maybe also their children, but it tends to be the family, the owning family. The advantage is that they can pool their assets, which often makes it easier to buy property, because your properties tend to be big, so it allows you to do that. It also allows you to administer your pension assets in one lump, which is administratively more simple, and it means that if you've got a husband and wife situation, you can make sure that your assets are the same, which is just a handy thing to do and an administratively easier thing to do. So a SAS or a SIP. So why do people want property in their pensions? Well, I think that they want the property in their pensions, firstly because then the rent, it goes into your pension and it's not taxed at that time in your pension, so they like the fact that the money coming in is like, particularly if it's your own property, you're putting your own rent into the pension, you're getting tax relief in your company for the rent expense, and then the pension receives the money and it doesn't pay tax on it, and we quite like that. And also we like the fact that the capital gain is not taxed within the pension scheme, although obviously when you take money out of a pension scheme there is a tax effect, so we like all of that. Also, I think we like the fact that that's where the money is, so that very often if you're trying to buy your own premises from which you operate, and you want to buy the premises, but where's the money? Well, very often the money is in your pensions, so therefore people use out of necessity, use their pensions to buy their property. So they like holding property, it's where the money is, and then there are some tax advantages, and sometimes if the money is in your pension scheme and the property is in the business, you can sell it from one to the other and get the money out of the pension scheme, get the cash out, which can be really useful. So there's all sorts of reasons why you would end up with property in your pension scheme. What's that got to do with the new rules? I hear you say, well, it's really important because now we're going to pay inheritance tax on things that are left in our pension scheme. So let's think about this. If you have property in your pension scheme and you just leave it in there until you die, then at that stage that property is going to be included in the assets in your estate and subject to inheritance tax. Now, very often if you're running a business and you've got a nice home and all the rest of it, it's quite easy to get very close to or into inheritance tax, because the inheritance tax limit is 325,000 for an individual, which your spouse also gets that, so that's 650, which is shared between a couple, And if your estate is worth less than 2 million, then you also get 350,000 between you for your house, as long as you give it to your heirs. So if you add all that together, you've got about £1 million to play with. £1 million to play with. But your pension asset, particularly if you've got property in your pension, that might bang and put you right into inheritance tax. Or if you've done inheritance tax planning, it might put you way over. So first of all, if the property is just sitting there in your pension, you can't take it out in great old age, because where's the money coming from to do that? So it ends up just in your pension, and therefore in your estate, and therefore subject to inheritance tax. But it's worse than that. So let's just think this through. If you get to great old age, you die, all of your assets in your pension are subject to inheritance tax. Now, if the properties are the only thing left, because you spent all the other money, not unreasonably, because your pension is supposed to be to keep you going while you're in old age. So let's say you'd be very fortunate and you've got £1 million of property in your pension scheme. Well, then there's going to be 40% inheritance tax on that asset. So that's £400,000. Well, that's a lot. So that's worth thinking about just to start with. But who's going to raise that money? Because it's the trustees that need to pay the inheritance tax. Now, if you spent everything else in your pension scheme, where are they going to get the money from? Well, first of all, there is a restriction on how much they can borrow. So at that point, your pension scheme is worth £1 million less than £400,000 of inheritance tax. So your scheme is worth £600,000. But the trustees can only borrow 50% of the value of the scheme. So that's £300,000. So they can't borrow enough to pay the tax. And because they are professional trustees, they're absolutely obliged to pay the tax when it falls due. So what do? Well, they're going to have to sell the property. I can't think of any other way, unless there's they're going to introduce something generous to help us, which they form on not doing that. So what's going to happen is you're going to have a forced sale of your property. And we all know what that means. It means that they're not going to get very much money. And your heirs won't get what they want. So we can worry about the tax of 40%, the fact that that 600,000 that's left is probably going to be subject to income tax, maybe at 40% when your heirs take it out. So that's I think that adds up to 64%. But then, to add injury to that, they're also going to be forced sellers. So they're going to get buttons. So I think we need a strategy as to what we do with these properties in the very long term. And I'm certainly devising and working out what can I do with my properties in my pension scheme. And I think it's an issue that we really need to think about as a long-term plan. And just as a little aside, it amuses me, the sort of, I like things that go around in circles. So it's not fun, but it's sort of poetic. So the government's so-called black hole is largely a result of some large pay rises that they gave to public sector employees. Now, public sector employees, when they get a pay rise, they get an augmentation to their pensions. So in effect, we're being taxed on our pensions to pay for the pension increase for public sector employees. So there we go. But I think it is, hopefully they'll soften this in some way, because it seems really harsh. But anyway, I think we need to have some sort of strategy for properties that are in pension schemes. We'll continue to do regular updates and regular reflections on our budget that we had just a few weeks ago. So please subscribe, and I'll keep you up to date on those. And if you press the like button, it just helps me and it helps the channel. So if you could do that, that'd be really kind. Thank you very much.